Okay, and we are now live, so we're ready for people. I'm going to mute myself and I'll leave you.
Right. Good morning. Thank you for joining us. We'll give everyone a minute or so to finish logging on or dialing in, and then we'll get started. Okay. It's 8:32. We'll give about another 30 seconds. All right. First, I want to thank you for joining the Arizona Manufacturing Extension Partnership for our workshop on establishing supply chain resilience. My name is Gary Williams. I'm a senior client advisor based out of Tucson, representing Southern Arizona. First, I want to start by giving you an overview of the Arizona Manufacturing Extension Partnership, or MEP for short, and how we operate and help manufacturers. Quick note, if you do miss something, or if I happen to go too fast, this is being recorded so you can view it later at your convenience. So here you can see our team of advisors, including our executive director. And as you can see, our mission is to help Arizona manufacturers be the most successful they can be. So the way we're structured is a partially federally funded not-for-profit program, and we are overseen by NIST, the National Institute of Standards and Technology. Here in Arizona, the Arizona Commerce Authority holds our grant, so we work operationally through the ACA, and it's a tremendous benefit to our program. However, we're measured by NIST, and our funding is reliant on the impact that we bring to the clients that we serve. NIST does that through a brief 8 to 10 minute survey asking how we impacted your business, whether it's cost savings, increased sales, things like that. All of these surveys are rolled up across the US from all of the MEP centers and measured. Here are some of the impacts from last fiscal year. So basically, 115,000 jobs created, 15 billion in new sales, 1.5 billion in cost savings, 4.5 billion in new investments. Now, some of the biggest challenges reported across the US are cost reduction, employee recruitment, growth, and product development. The survey also asks how we were to work with. Across the nationwide network, we have a net promoter score of 85, but in Arizona, we maintain above 90. So we're very proud of that score, and we like to help our clients maintain a competitive edge here in our state. So with our relatively small team and our third-party partners, we can bring a variety of services, including some you can see here that can uncover hidden cost and bring you immediate value, including supply chain, which is what brings us here today. So if you have any questions, please put them in the Q&A and we'll get to them throughout the hour. If you want to learn more and see how this specifically relates to your business, then just reach out to your client advisor, or if you're not sure who that is, just reach out to the Arizona MEP and we'll connect you and set up a meeting with Seema individually. So with that, I'd like to introduce Seema Full, Principal of 4Optics Transformation Leaders.
Thank you very much, Gary. I am going to share my screen. Gary, can you let me know if my screen is visible? All right.
Good to go.
All right. Good morning, everyone. It's a pleasure to be here today. I wish we were in person, but Zoom is just as good, if not Better, it allows us to reach people across multiple geographies. However, one of the drawbacks is that we can't have, bi-directional conversation. So what I'd like to do is ask you to hold your questions. I'm going to go through sort of my ideas and thoughts in about 20, 25 minutes, and then we'll have plenty of time for Q&A at the end here. And my friend Gary is going to help me keep tabs of any questions that come up through the chat. And so he'll stop me and let me know if we get any questions. So before we begin, let me take a moment to introduce myself and 4Optics. My name is Seema Phul. I have been in the industry transforming supply chains for over 25 years. I have experience in multiple industries, including aerospace, defense, high-tech and manufacturing, consumer goods, et cetera. And I lead 4Optics, which is a boutique management consulting firm, and we are focused on helping our clients improve their operations. Our team is built up of practitioners, so you won't find fresh recruits that are just learning on the job. That you'll find industry practitioners who have decades of experience that are able to leverage their experience and having been in the middle of industry to help our clients improve their operations. So with that, we'll get started. So today I'm going to talk about the current environment. And as you can see where we are today, with everything that's going on, we are being tested. And what we'll do is talk about how are we responding and how we should be responding. So it is no doubt that supply chains are complex. In fact, it's probably a misnomer to call supply chain a chain. It really is not a chain. It's a complex web of relationships across different entities. A given company can be your customer, can be your partner, could be your competitor, all at the same time. And we have, we have product launch cycles that are becoming shorter and shorter. We've got customization by the consumer that has picked up in the last 10, 15, 20 years at a rapid speed. We've got sourcing partners that are around the globe. We've done globalization over the years. And so as you can imagine, there's a lot of complexity that's inherent in the supply chain as it is, okay? Now you take that and you layer the market and the macroeconomics issues that we're dealing with on top of that. You've got China's suffering the slowest growth since 1976, right? European Commission is activity, it could be comparable to 2000, drop in activity is comparable to 2009. We've got issues around, in the last 15 years, 52% of the Fortune 500 companies have disappeared, and more will disappear, unfortunately, as a result of the pandemic that we have going on. And many of our suppliers tend to be smaller companies who are, mom and pop owned companies that have survived on having some very, very loyal customers. However, due to the drop in these larger OEMs and the demand from these larger OEMs, we're seeing that many of those smaller companies are suffering the most. So, again, what we are facing right now, we're facing unprecedented times from multiple angles and from different points of view. So what we would like to do is talk about what do we do now? So obviously, we could sit back and say, you know what, lick our wounds and say there's not much that can be done. However, that's not the case, and that's not reality, and that's not what us business people do, especially supply chain people. So you've heard a lot of buzz around resilience. So I'm going to take a moment and really talk about resilience as what it is. So to me, resilience is about how quickly you can get up and get back and get back on course with your business. How quickly can you assess what's happening and what is your course of action and get your organization to growing in the same direction. So Sun Tzu, as one of my favorite authors, said, invincibility is a matter of defense. And I would say, in order to defend a business in trying times, a company must understand the risks by systematically examining area by area. That means every single function in an enterprise must participate in understanding risk. Knowing this enables the business to maximize the effectiveness of its strategy, but most importantly, you'll know where you need to make course corrections. And when you can make them so that you don't waste time, limited time that you have to take action, and the costly resources that are at your disposal. Okay, so that's what we're going to talk about today. So let's talk about what the solution is. We've got risk. As I mentioned, there's multiple types of risk. There's customer risk, right? So the demand of our customers is questionable now. It wasn't what we thought it was going to be a year ago. And perhaps they don't even know exactly what it's going to be because they don't know exactly what's happening with their customers. So we know that risk is inherent. Then there's product risk. So we had product development plans that we had put together now need to be reprioritized. And perhaps some of those elements need to be rethought because of the changing dynamics in the global macroeconomics area. Then there's delivery risk. You know, we've got disruptions in the supply chain. However, we have some synchronization opportunities. We have some opportunities to really understand the dynamic fulfillment capability that we should be looking at. So from a risk perspective, think of risk in those three buckets. So when you think about what do you need to do, right? What's the solution? The solution is to connect and synchronize the enterprise. And so you might be asking, how do you do that? So you do that by engaging every single part of the organization, of the enterprise, what I call synchronized enterprise. You start with sales and marketing and give them the challenge to understand the portfolio management piece. Really understand what needs to happen in our portfolio of products and services, what needs to change. Then you bring sales and operations together and have them understand synchronized planning. Force the organization to rethink inventory strategy. Go after sourcing and procurement to understand supplier risk. And I'm going to talk about each one of these, what that means. Then really force the organization, the operations organization to say, based on this risk, based on this synchronization of plan, and based on understanding your supply chain risk, tell me what is my delivery assurance? Meaning, what do I need to do to make sure I can meet the needs of my customer? And then the final piece is where your executive team needs to take a step back and say, where do we have opportunities to capture growth? When an economy is down, that's the best time to think about growth. And it might sound very strange, but it actually is. Most companies will spend time basically shutting down the spigot and saying, how can I save on costs? And that's the right thing to do from a tactical perspective. But it's also a time to step back and say, what strategic moves can I make so that when the market comes back, which it will, how will I stage myself so that I can capture the most growth possible when the market comes back? Okay. So this resilience plan, from my perspective and my team's perspective, and again, like I said, my team is made up of practitioners who've spent decades working in complex supply chains and complex businesses. And so we took a step back and we put this model together that allows organizations to, in a very, very succinct way, understand how to put a resilience plan together. So there's 4 steps to this plan. And the first one is about understanding risk. Okay, so as I mentioned, there's different buckets of risk. And then, we'll talk about that in a little bit more detail. And then the second step is to anticipate near and long-term future. So don't get fixated on the quarter. Don't get fixated on the next quarter. Really think about what is your near-term future and what is your longer-term future. So think beyond the downturn. Focus on range of changes as well as the response time. So don't get fixated on a specific number. Think about the ranges, and I'll talk about that in more detail in a few minutes here. Then final step is to develop and implement a risk mitigation plans, okay? That is very, very important because if we don't actually take the last step of implementing these plans, then really we just have a nice binder that we can put on the shelf, and that's not the intent of a resilience plan, okay? So let's go to the next step, which is understanding risk. So risk is, like I said, there are multiple types of risk. So you've got the market risk, and that is looking at how has my portfolio changed in terms of the product portfolio. There's product risk. How has our demand changed? And that's really important. What that means is the product that I was selling to my customers, how has that changed in the course of, in light of the events that are taking place globally? Okay, if I had 10% growth for a certain product portfolio, now it's 2% growth. How do I adjust that? How do I know that's the case? Who do I need to go vet that out? How do I get the voice of the customer into that mix? Okay, so understanding those demand dynamics is very important. And the final is delivery risk, and that is where could our supply chain network fail? And when I talk about delivery risk, it's not just about the suppliers. It's about your own internal manufacturing as well, your partners. And by the way, in aerospace and defense and many complex supply chains like medical devices and so on, there's multiple tiers in that supply chain. So make sure that you're understanding not just your next supplier, but the tier 2, tier 3 suppliers from yourself, and understanding them from the perspective of, are they financially viable? Do I have risk of my IP getting trapped there? Okay. The one of the big dynamics that's happening now is that we've got a lot of reshoring happening. When reshoring happens, you've got to pay attention to risk for having your IP re-engineered or being trapped in a specific geography altogether. So you got to get really smart about that, and you can't make those plans on the fly. So that's why I say, understand the risk of not just what's happening today, but what's likely to happen in the future, in the near future. Then the final piece that I don't have on the visual, but it's very important, is the infrastructure risk. The infrastructure risk is, how secure is your enterprise? How protected is your information flow? Are your designs protected? Do you have the right alerts in your system that tells you if something has been compromised within your infrastructure? Okay, so that's the first step, which is understanding risk, and you do that by focusing on your portfolio analysis and focusing on demand forecasting. Okay. Now let's get to the next step, which is anticipate near and longer term future. Okay, so how do you do that? You focus on synchronizing your planning, and you're building a robust inventory strategy. So the first step to this is designate a planning team. So what that means is make sure that you choose folks in your organization that understand the demand side of the equation as well as the supply side of the equation, and that there's a leader in that team that's going to bring it over the finish line, because it can become analysis paralysis, type of an issue if you don't have someone who can take that thread and bring it over through the organization and help us understand what the fundamental actions are that need to be driven. So putting that planning team first is the first step. Second is define the demand scenarios. Make sure you really know what your customers need and when, okay? Now, you will not be 100% sure, and that's okay, because guess what? Nobody is, especially in the current economy. Nobody has 100%, confidence in anything that might happen, because we're in unprecedented times. So what you want to do is learn from the past. When we've had market declines in the past, when we've had supply chain disruptions in the past, how have certain customers and certain markets reacted? And so take those elements and really ask the team to think through what might happen now. Okay, because we know history is somewhat different, because we've had globalization, we've got technology that's been proliferated all over the place. So sometimes that can lead to rapid decline in a market, and sometimes it can actually buffer you from a decline from certain market segments. So really ask the team to think about, take the history, superimpose where you are today, and what does that tell you, what's likely to happen? And again, take your best estimates of what is likely to happen. Then third step is execute a supply modeling scenario. What that means is that take that those demand scenarios that have been defined, run it through your supply planning process, and say, how likely am I to be able to react to this? And oh, by the way, how much inventory, how much cost do I need to have in my supply chain dedicated so I can capture this market or be able to react to these changes? And who in my supply network is going to be my weakest link? And what do I need to do now to assure that that doesn't happen? So steps 1, 2, and 3 will allow you to see where you have some opportunities to improve your supply chain, okay? And then the third one is directly link financial projections to demand and supply scenario. This is very, very important, because the finance organization must be in lockstep with what you're planning from an operations perspective and from a sales perspective. And what the finance team is likely to do and ask you for, how confident are you in these scenarios? Like I said, nobody's going to be 100% confident. So don't expect yourself to be, and don't expect, you're going to have to educate finance, who might want you to be 100% confident, but that's not reality. So what you need to think through is, what is my confidence level? And oh, by the way, the most important thing is, how quickly do I need to alert of a change if I should see that my scenarios are not coming to fruition? And that's what finance needs to know, because that gives them the opportunity to put cost measures in place or additional investments in place that they might need to have if you see the changes coming at you faster than you expected. Okay? So your translation will of the 4 steps will be production, inventory, and delivery options, and you'll have scenarios. If this product goes up by this much, or if this product declines by this much, if this segment of the market comes back sooner than we expected, here are the tasks here are the actions we need to take. And oh, by the way, we need to take them 3 months in advance of the market coming back, or 6 months, or 2 weeks, depending on the scenario. And that's the level of clarity that you need to create in the organization. Okay. So like I said, let's talk about focus and change and range. So again, think about how you can use your data analytics to quickly dissect those demand and supply structures, and to be able to say, I think that I need to be, this will be within plus or minus 10% of what my demand is today. Or this particular area is likely to go down by 20 to 30%, and therefore I need to make different decisions. It is very, very, I guess, typical for organizations to almost wait too long. And they'll look for, well, I know what I need to see because my mechanical, indicators are, from a mechanical supply chain, my indicators are this, from my electronics supply chain indicators are this, and they'll start watching those indicators, but we almost become, shy of making those changes. So what I'd like to ask is that when you think about this, make sure that you understand the response time, in addition to the range of change that you've defined, how quickly you need to be able to respond to those changes, okay? So let's talk about developing and implementing that risk mitigation plan. So how do you develop that mitigation plan? You do that by making sure that you've got key supply chain management tools and strategies for recovery and beyond. People often say, when we are in a downturn, are you telling me that I should actually be investing money in inventory? And my answer is absolutely yes, but not inventory across the board. You should be investing in inventory based on where inventory will help you mitigate the risk, okay? You should be thinking about which of my suppliers I need to go and make sure that they have what they need so that they will survive this downturn. And oh, by the way, if they can't, and if they're not, how do I protect my IP? So what I mean there is that you got to think about the entire ecosystem in your mitigation plan. So quickly enable and robust supply chain metrics, supply-based metrics are very important. And you only really need the basic data. You can look at the historical performance of these suppliers. And if you look at across, say 2, 3, 4 years of data, you're going to start to see patterns. And those patterns are indicative of where you have issues in your supply chain. Okay. And they're very, very, very quick to do these analytics, to be able to spot those hot spots and those areas in your supply chain that really are the ones that you should be paying attention to. Then what you do is you create focus on your high-risk suppliers and prevent the future disruption. This is where you get your buyers, your procurement managers to focus in on, now that you've taken a look at the whole supply base and you've narrowed down where your hotspots are, really go after those hotspots and create that focus point for your buyers and for your procurement managers, and make sure that they've got a daily, weekly, a drumbeat to get this information, and to make sure that they're flowing that information back to the original team that I mentioned, the resilience team. Then the third piece is create focus on delivery assurance. So take the supplier delivery from a very descriptive to predictive mode. And what I mean, let me take a minute and describe that. Descriptive is looking at history. What has happened? How have these suppliers performed? Predictive is saying, okay, based on our demand and supply scenarios, how much of my future demand is relying on the same supply base? So if I were to superimpose those issues onto my future demand, how much of my future demand is at risk from being delivered? That's what delivery assurance means. So being able to do these two-pronged analytics is really, really important to understanding risk of your resilience plan. I make the point here, don't be afraid to make bold moves. And I really mean that very sincerely. When I was I've been in supply chain industry, as I mentioned, for over 25 years. And I've spent good bulk of my career in industry. It's only the last 7 years that I've been in consulting. And when I was in industry, I was very, very, I was actually almost like wedded to this thought of do what others will not have the audacity to do in your supply chain. but don't do it without having an educated, basis for your hypothesis. However, most people will sort of take a step back and say, I think it's time for me to not spend a lot of money. I think I need to really understand where I should focus before I start to, and I really need to have some indicators that tell me that the market's in fact coming back. I need to have some POs from my customers that indicate, that there's an uptick in demand. Well, guess what? By the time your customers give you that uptick, it's already late. You're already in the middle of the recovery, and you are going to then be chasing folks who may have made bolder moves. So the bold moves means while the market is down, figure out what might happen, figure out what your control parameters are, right? And within those control parameters, make the bets you need to make. If you need to buy capacity from a specific suppliers, do that. If you need to invest in different machinery to ensure that you have better output than you've had in the past, do that. If you need to train your labor in a different way, do that. If you need to place inventory buffers in specific materials in specific areas, do that, okay? So, and the final thought I will leave you with this from an implementation perspective is, don't create a plan for the bookshelf. Your CEO doesn't care if you have a nice bookshelf. I don't know if you can see the bookshelf behind me. It's very messy. So the bookshelf is not what's important. What is important is that you've got a living, breathing plan that is implemented, that is reviewed on at least monthly basis, if not more often than that. And you've got the entire organization providing their input. So you don't want sales to say, well, I was never part of that plan, or marketing to say, I was never part of that plan, or operations to say, well, no one asked me if that could be done. That should be taken off those types of arguments should be taken off the agenda. It really needs to be an enterprise that is synchronized, understands the assumptions, and is able to make quick decisions. And oh, by the way, most important, is able to challenge one another. Because if you don't allow the organization to challenge one another, but then force them to get to a decision, you won't have a good plan, a mitigation plan. So this is really, really important part of ensuring that we have an organization that is going to prosper when the market comes back. So make sure you've got a closed loop to continuously review that plan, and make sure that you're involving those stakeholders and giving them opportunity to ask questions of those plans. So with that, let's do some Q&A. Gary, do we have any questions coming up?
Yes, there's one here. It is, do you recommend starting at a value stream mapping of the organization to understand the takt time and clearer understanding of impacts?
Yes, so that should be one of your, that should absolutely be one of your key steps to get started. Many organizations will actually have these value stream maps that they can rely on. But however, we do know that when we have disruptions in the supply chain, the lead times change, the cycle times change. So value stream maps of your key products and key areas would be one of your prep activities that you would do, that you would bring into the session. That will be done by an operations team to understand key constraints.
Great. The next question that popped up is, how do you get started with this plan?
Okay. So, one of the things that I do recommend to my clients is that, obviously bring in me, but, and if you don't want to, that's fine. Bring in someone who understands how to do this from beginning to the end, to make it really efficient, because it really is not, the process itself is not complex. However, hurting the organization and getting them pointed towards the same direction, giving them specific templates to get them going so they're not spending, weeks and weeks figuring out templates and how to collect the data, that makes it easier and quicker to do that. So what we do is we typically start with an assessment, and that assessment could be anywhere from, honestly, from 3 to 4 weeks. That allows us to say, this is how this organization should launch this plan. And that assessment then gives that organization a springboard to get started.
That's great. I think you answered maybe the next question. It was, how long this assessment process does it take? And you mentioned approximately 3 to 4 weeks to get a grasp on that. Following up with that, I'm a service company. Does this apply to me, or is this just for manufacturing?
Actually, it's very, very important for service companies to look at this, because at the end of the day, your service is a product as well. and you have constrained resources, you've got a supply chain, you've got expensive resources that you need to implement. And in many cases, services are more important because sometimes the margin on services is not as big as where you have manufacturing, where you have some control over some of the costs. So what I would say, it's very applicable to both product and services companies.
Great, thank you. There is another question that just came in, is how can these principles be used in a smaller organization, specifically less than 100 million revenue?
Yeah, so, you know, it actually, all the principles still apply, and you actually just get it done quicker. And I would say because you're smaller, you're nimble, and you don't have a whole, you know, like if you think about it, you don't have a huge organization to corral. You probably have a handful of folks that know this business, know the demand, know the supply, and you can, you know, get this done very quickly. We have a client that is roughly about, I think about $60 million, and we were able to get them through this process in 3 weeks.
Wow, that's fantastic. Here we go. I have, what are the primary metrics that are required for the process?
Okay, so the primary, there are a few different metrics you want to look at. So from a demand perspective, you need to understand, first of all, you need to understand your portfolio. In that portfolio, you need to understand what are the products and what are the margins that you make on those products. Too often people get fixated on revenue. Revenue is great. Revenue is king. However, revenue that doesn't contribute to that doesn't actually give you bottom line profits is not so great. So what I always ask organizations to do is make sure from a portfolio perspective, you understand revenue contribution, margin contribution of your products. And each one of your products has a personality. So they've got volatility, they've got forecastability, there is certain pattern of customer orders. Those are the metrics. Those are the key metrics you want to understand about your products. From an operations perspective, you want to understand the key constraints in your manufacturing, both from a labor perspective, as well as from your machining perspective, as well as from your suppliers. Understand who are the key constraints and know why they're the key constraints. What do you need to do to break those key constraints? So metrics around, you know, your long lead part numbers, on-time delivery from your suppliers, your amount of past due, and your supplier's ability to reduce that past due, and how quickly they're able to do it. Those are the key metrics. And then what you want to do is bring it together and say, based on each part of my market and my key customers, what are my expectations as I march into the future? Are there going to be different delivery expectations from certain customers? I have a client that, you know, it's a repair shop actually, so it's a services company, and that actually has both cargo and, passenger travel planes that they work on. And what's interesting is that as we saw the shift in the market in the last a few months, the cargo business went up quite a bit. And what's interesting is that a delivery expectation for a cargo business is very different than that of a airline. And what we found out was they actually had to really rethink their plan to really say, okay, now my cargo customers that used to be about maybe 10 or 15% of my business are now 40% of my business, but their expectations around lead times, their expectations of turnaround time on a repair is very different. So they had to quickly re-engineer their supply chain to be able to respond to that shift in their marketplace. Gary, any other questions?
I'm giving folks a chance. I've gone through everything that is in the Q&A. Maybe there's some in the chat. Let me double check real quick. If anybody does have any questions that come up, definitely please type them in and we'll get them answered.
And I'm going to stop sharing so we can have somewhat of a face-to-face dialogue here. Yeah, I see there's like 8 questions or 8 items in chat.
Yeah, those are all of the ones that we've
Okay, that we've gone through.
for sure. Yes. Aha, here we go. Thank you. I'm a small company, about 4 million in revenue. How much investment would be required to set this up?
You know, it's hard to say without understanding other aspects of it. It's not a huge investment because it's not like you're buying a new system. It's not like you're buying any capabilities and so on. It's really understanding how to run this process. And the way we work is we coach our clients. We don't come in, bring a, army of consultants and leave them there for weeks and months. I'd be happy to answer that question more specifically if you want to reach out to me through the MEP, and then I can give you more specific question based on sort of where you're at. But certainly, it is not a long, drawn out process that requires lots of time and resources.
That's great. I can confirm that. Typically, a 30-minute conversation over the phone would be able to point folks in the right direction. We'll give a few more moments here, see if any last-minute questions pop up. I know we're certainly ahead of schedule, which can be a good thing on.
Gary, one of the things that comes up often in this particular area is, companies say, well, it just seems so daunting. And that's often what I get is like, it just seems like, my gosh, can I ever do this? And it can be daunting if you don't know where to get started. And if you are, trying to do this in a vacuum. So that's another area that I think I would encourage folks, out there to really reach out to the MEP. There's a lot of resources that can be made available to you guys very quickly, so that, the data analytics that we use to share, to run this information is all in a SaaS model. So really all we need is a spreadsheet of your data, and we will run it through our models that helps us understand where are your hotspots, where are the issues, and we give that information back to you. And that's a great starting point. And then you can start to have the dialogue. And one of the things that we do is facilitate dialogue within the organization. So we run the data, we'll get on the phone with you, and we'll facilitate the dialogue between your marketing and your operations teams and so on. And it's about as simple as that. But if you try to sort of figure it out on your own and do it, my concern becomes that, the recovery will be here and we'll still be trying to think about how to do this. So we have really simplified this. It's kind of I joke with my team. I have a really dry sense of humor. So I joke with my team, it's like resilience in a box, right? How much easier could it get? We take your data, we run the scenarios, we tell you where the hotspots are, and then we work with you to analyze those hotspots. And then you're ready to make decisions in a matter of a couple of weeks.
Be careful what you ask for, right?
Yeah, exactly.
The data will show.
Yes.
So there are a couple of questions popping up. So what recommendations do you have for companies that bring suppliers back to the US from other countries?
Wow, that's a loaded question. Lots of recommendations. First, you got to have a really good understanding of what you're bringing back and why. Because too often, so this is kind of, if I go back to, 15, 20 years ago, we moved all that we could offshore because we were chasing labor efficiency. And in many cases, those decisions were not the wisest decisions. In many cases, those were great decisions. However, so what I would say is that when you're reshoring, bringing manufacturing back or labor supply back, think about where's the best place to place this new reshoring activity. What I like to do is the trend that I'm seeing is people are moving out of China, and they're moving to Malaysia, they're moving to other Asian countries, and they're moving to Europe. And I kind of scratch my head and saying, but your customers are still in North America. There's a huge viable opportunity in North America, hint, hint, Arizona. And there's a viable opportunity, even in South America, right? So when we chase just the labor piece alone, we will constantly be chasing. So you got to think about it from a total cost of the supply chain. So what I do is when I work with my clients, I say, okay, I know you want to get out of this geography. That's great. So I had a client for which we consolidated 6 factories in 2 years. And we were able to, and one of them was in China. Okay. And we were able to do that because I forced the organization to take a step back and really create a plan from the very beginning. We did a core, non-core activity that allowed us to say, here's our core manufacturing processes. So where do we want those? What type of redundancy do you want in those processes? And where do we best protect our IP and our designs? Where do we have resources that we know we don't want to have any trade-offs for? And then what are my non-core activities? Those are things that I can outsource, but what's the best place to outsource it? I may pay 30 cents more in this particular geography, but I know that I'm gonna have lower cost when I think about the logistics and transportation time. When I think about where my growth is for that product from a customer and end unit perspective. So you really want, so I encourage people to do that supply chain design work up front. And then when you're thinking about moving these locations around, one of the biggest things you got to do is understand the laws and the rules of getting out. So for example, in China, as soon as you announce that you have the intent to leave, all your assets are frozen. And those assets can be frozen for years. And you are now liable for taxes, all sorts of really nice fees that can be, you didn't know because it was something the province just decided. You didn't know because it was something the central government just decided. So really be smart about those decisions. Be smart about how you announce these decisions. Be smart about how you execute that process. So for example, understand where you might have requalifications and recertifications you might have to do for your customers. Think about how you're going to inform your customers about this move and what actions you might need to drive there. Think about what kind of buffer inventory you need to build so that you don't have disruption in your supply base. So we did all of that in that case study I was just telling you about, a client where we moved, consolidated 6 factories in 2 years. And we were able to do it boom, 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 because we had an experienced team that looked at all of these elements in a very methodical way. And then it was time to execute. So what I would say, that's my long-winded answer to that question, but I'm very passionate about reshoring. It's one of my key topics because we do have an opportunity to create, take back some of that loss that we've had in our country and really help our organization. But we need to do it with innovation, not just bring back the same crappy processes that we outsourced. Sorry for that language.
No, that's great.
I'm a supply chain gal, so I use fancy language.
A little passion too. That's great. Now we do have, so there's one final question that's in the queue, and it is, we are a growing company and are in need of a vendor supply chain management software package to integrate with our ERP system. Could I consult with you to help me select the right software for my business?
Absolutely. Absolutely. We will look at your requirements. We will look at what you need, and we will help you come up with options.
Great. We'll give just a couple more moments here for any last minute questions. We do have about 15 minutes.
As soon as you say that, a question pops up. I just saw
that's every time. We want to make sure to give.
Oh, that's great. That's great.
Process and marinate, and you're exactly right. Every time you will ask again. I do see here, call your MEP advisor. That's absolutely correct. There we go. Looks like somebody's typing.
So while they're typing, I want to just give you guys, those of you who are on the phone, just want to give you a heads up. This is going to be a 5-part series, and we're going to be talking about many of the elements that are important to our companies in Arizona. And ACA MEP is doing great things to help improve manufacturing capability within Arizona. And I'm leading the supply chain sector of the Policy Academy, where we are reaching out to manufacturing companies in Arizona, helping to understand what we could do differently, what do they need to be, what services could be provided, what policy changes could be put in place to help bring more business to Arizona. So I would love to reach out to you guys and help. We're going to be doing a focus group probably later this month, and I would love to have that opportunity to have your voice into that policy that I'm part of the policy that I'm leading around supply chain. Because like I said, Gary, I have a little bit of passion about Arizona, a little bit of passion about supply chain, because I do think that we have such an opportunity, where we sit in terms of the availability of great resources And oh, by the way, we get really good weather. We don't get too many issues. And so, yeah, heat, we'll deal with the heat. But, we really have, from a logistics and transportation perspective and the ability to reach other parts of the country and world, we are a great opportunity for other companies to join us.
That's great. And it's so true. There are so many opportunities we have right here in our own backyard. And just the highlight of my job is being able to cross-pollinate and meet folks and introduce and share the really spectacular things that we're doing throughout the entire state. So I don't see any additional questions, but everybody that's still on, if something comes up, this recording will be available afterwards. And then also please save your questions for the remainder of the 5-part series that we have for presenting to you. So I'll go ahead and in closing, I'd like to thank everyone for joining us. Like I said, this recording will be available for you afterwards. If anybody thinks this might be a good fit, it's probably a good idea to talk to your advisor and then SEMA for 30 minutes just to get the specifics about your business and see if it makes sense. Also, there will be a brief SurveyMonkey survey going out afterwards, so you can give us feedback and then we can improve future webinars. So with that, I'd like to thank you all and hope you have a fantastic rest of your day. Thank you.
Thank you very much.